This is the video for Friday, February the 14th, and the first thing you'll notice, lower volume on the Dow, same volumes we've seen on the NASDAQ, relative average volume, lower volume on the S&P 500. So this is the first time that we've seen volume lower than the relative market volume in quite some time. Advancers and decliners were even, pretty much. On the New York Stock Exchange, advancers led decliners by a tiny fraction, and that resulted in the McClellan oscillator actually not doing anything. But what we talked about last time, which was the complex and simple patterns that McClellan wrote about. Look at these three trend lines, and what they have in common is they all were followed by a market decline. In this case, back last summer, by a very large market decline, which really took quite a long time to come back to the zero line. And then we had December of last year, where after 3 attempts at this line, it fell down into the oversold area. And it would look like that's going to happen again. So prepare next week for the market to go down, because you have the coronavirus fears, which are now getting more serious and having spread to France. So all the more reason for the market to fulfill its wishes, which is to go down. The Volatility Index, however, doesn't show that. Our S&P, maybe we have this little cup handle forming here. It's unusual. We should have the cup handle forming right at the zero line, but maybe we have it forming here. Or we're going to come back down to this previous high and test it before moving higher. But this does look like there's a bit of bullishness there. In fact, the day finished at the top of its range, so you have what's called a hammer candle. Those sometimes will indicate a reversal, so keep an eye on that. Apple, still just chattering around its high, unable to break through. The SMIs are showing in both cases that it's overbought. Caterpillar came down to test the 200, but what we said is that the 50 would prove to be resistance, and that's what happened here. The 50 was resistance, so it fell down, found itself on the 200-day moving average, and found some support. Volume was just the same as the market, a little bit less than average. But what we have in our SMIs now is we have a turn in the slow-moving SMI going higher, and the shorter time frame, or the faster-moving SMI, has been moving up steadily since it found support on this trend line here. So Caterpillar would indicate that it's going higher, and it could continue to bounce off the top of this cloud until it gets into this area beginning of next month. Goldman Sachs, been a little disappointing since I bought into this stock. Now it's struggling with the 8 EMA. I'm not bullish at all on financials. I just thought that Goldman Sachs looked like an opportunity, and I may be getting out of that, for a minor loss of maybe $100 on Monday. And we can see both SMIs indicating that it's on its way down, although the shorter term SMI has hit the bottom and could be bouncing back up again. The longer term outlook for Goldman Sachs isn't as good. Shopify continues to struggle at this particular area here. And remember, we're comparing it to what Amazon did. Amazon on its third day had a nice jump and reasonable volume. Shopify on its third day after earnings just went and found, the top of the gap basically, and found support at the top of the gap. So let's draw that gap in there because we're going to keep an eye on it. If you're still in Spotify, there's no reason to get out of it. I'll draw that later. Tesla, no motion. I'm still short. And that short position is starting to get a little bit better. And I'll continue to be short in Tesla. Trying to find the article that explains why Tesla's stock is doing what it is. It was on CNBC.com. It's showing in its SMIs a downward trend is certainly on the horizon there. And lastly, not lastly, but Amazon, a little bit of a pullback, super strong stock, and will continue to do very well. However, it is very dependent on China for a number of the products that it sells. So on one hand, it would be great for the American buyers. They wouldn't have to go and expose themselves to the virus at the malls. But they may not be able to get what they want from China because they may not be able to, Amazon may not be able to source it. The other two stocks that we were looking at, remember, were in the area of cybersecurity. And SPLK made a new high. Cisco is the one I'm more interested in, and it was stopped on the 200. So on a good day for Cisco over the 200 on Tuesday, remember the market's closed tomorrow, I'm going to be buying into Cisco, and I'm just going to buy the stock. I'm not going to buy options. So I'm going to say when the price crosses the 200, that's not the 50, the 200 EMA, I'm going to get an alarm, and I'm going to jump into that. But look at the volume. I know that it shows a red, oh, I'm sorry. My apologies. I was looking up here, the rejection of the 200. We need to be looking here. And this is where we have support on the cloud. Totally. I should do the video over again, but I won't. That volume was quite high, and it was selling volume. And our SMIs are both showing a downward trend. So this is not the time yet to get into Cisco. It's more like time to stay and watch. But if we can get a bounce off of the cloud here, it's something that we might nibble on because the stock is only $47. So we might nibble on a little bit just to put it onto our screen, our list of owned stocks. Have a good weekend, everybody. I still think next week is not going to be favorable for the market, and I'm relying on the McClellan oscillator.